You ready?
Gotta be excited like me, man. I'm ready to go into some more great training. Talk about some more good stuff, and on my favorite topic. And hope everybody keep coming in the room, but we're gonna go ahead and get us started.
It's on the side.
Yeah, I know, but I'm putting this stuff back there.
And if you got your mic open, please mute out for me. Appreciate it. So Johnny, you want
Want to welcome everybody. Everybody, please mute your mics.
Yeah, somebody got a conversation in the background.
Yeah, please mute your mics. I want to welcome everybody to Futures and Commodities 101 Trading. That's our group disclaimer. Trading and investing carries a high level of risk. You could lose some or all of your investment. Trading commodities or any other financial instruments may not be suitable for all investors. Before deciding to trade, you should carefully consider your investment objectives, level of experience, and risk appetite. We accept no liability for any losses or damages you may
You have to do it off speaker if it's not working.
This means you alone
To do it without the speaker.
for your
Without my
actions
headset, I mean.
in any trading
Mm-hmm.
or investing activities.
Awesome, thank you, Johnny. We would normally go to Dr. Mel this time, but with her and Dr. Barbara not being on, we're gonna get through it a different way here. We got some quizzes that we had throughout the week, and if you want, Johnny, I could try to get them if you're not able to, and
Go ahead.
We can go over these quizzes that we had in the room. So I believe that we had 3 quizzes this week, if I'm not mistaken. So I think the first quiz we had was a quiz. A futures contract is a binding agreement between A, me and you, B, you and the broker, C, buyer and seller, D, not sure. I'm gonna read it again. A futures contract is a binding agreement between A, me and you, B, you and the broker, C, buyer and seller, D, not sure.
I'm gonna go with C.
Did I hear C?
C, yes.
And what was C?
Buyer and seller.
Okay, sorry.
Buyer and seller. All right. Okay. Anybody else want to take a stab? Anybody else got anything different from C, buyer and seller? Okay, well, correct answer is C, buyer and seller. Very good. Okay, we had another quiz, y'all. Let's go to the second quiz. What type of order do we prefer to use when we are looking to get into a trade? Anybody can tell me?
Limit.
Limit.
So we had 2 people say limit, right?
Mm-hmm.
Yes.
Yes, correct.
Yes.
Anybody think different? Okay, so everybody agrees on the limit order. And that would be correct. We prefer to use a limit order when we are placing a trade. Very good. All right. And I think we had one more. So if that's the case, if we prefer to use a limit order, let's go over the last quiz. Why do you want to place a limit order when you are looking to enter a trade? A, less fees and commissions. B, respect the market. C, get in the trade faster. Or D, let the market come to you. And E, not sure.
D.
Let the market come to you.
Let the market come to you. D.
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 Yes.
Okay. So anybody feel different? Anybody think it's respect the market or get in the trade faster or less fees and commission? Anybody feel different? So everybody agree with D, let the market come to you. Correct. Very good. Very, very good. Look like they on top of it again, John.
Yes, sir.
All right. Well, those were the 3 quizzes we had last week, and now we jump into this week's training. And on to you, Johnny, to share the screen, and are you able to pull those slides up for us?
Hang on just a second. Let me see.
All right.
Can you see them?
I can.
Yes.
I see the book.
Yes, go ahead.
I see that book. Yeah, I hope everybody's been enjoying this book and learning a lot and getting better understanding, because the book goes into more depth about what we go over and talk about, because these trainers are coming from that training on what's in that book.
The master had a good energy.
Yeah.
So we're gonna mute out.
Well, when I get
Hi, everyone. Good afternoon.
Good afternoon.
Hello, Ms. Thor.
Can y'all still see my screen?
Yes.
yes.
All right. So we'd like to encourage everybody to get the book that helps teach the program that we teach here. So, you know,
That's right. Please get that if you can. All right, Donnie, let's see what we got here, man. Let's jump into another lesson of training.
okay, we're gonna.
On these lessons.
Okay, this lesson is lesson 7 in the manual. Understanding the 1, 2, 3 bottom formation, support and resistance, and uptrends.
Oh yeah, good training.
Okay.
All right. Talk to us, Johnny.
How does the bottom formation form on the chart? Okay, a bottom formation forms after a downtrend, signals a reversal of price in the market, with the price momentum then moving to the upside, which is known as an uptrend. Okay, a bottom formation is a 1, 2, 3 occurs in a bottom formation known as support and resistance. There can be multiple 2s and 3s on the chart.
Johnny, if you will, let's go back to that first chart, first slide, and make sure everybody's clear on this when it talks about the fact that a bottom formation formed after a downtrend signal reversal. So basically, make sure you clear and understand that the market has been trading in a downtrend. The trend has been down, and now the market is starting to indicate that it could be changing direction. So giving us a reversal, which will change the trend, meaning that it's starting to do what's called making a bottom. It's starting to bottom out. So it's been trading down. Picture that in your head. And now it's starting to make a bottom, which means that it's going to be changing direction soon. And then changing the trend from a downtrend to a uptrend. Just to make sure we clear on what this slide is really explaining. Okay, Johnny?
Okay, 1, 2, 3 occurs in a bottom formation known as support and resistance. All right, in other words, the market has fallen or as far as it's going to go and it hits support. And then we'll change direction to the upside. It will hit resistance, which forms the 3, and we'll go back towards the number 2 or the number 1. Okay. Now, how do we find it? The number 1 is the lowest price on a chart. It, like I said, it's known as the support level. When that market changes and starts going away from the 1 and goes up and forms a 2, the 2 will become resistance. The market will turn back towards the 1, but not go lower than the 1, which will show a new support level. Okay. So 1, 2, 3, and we're going to show you what that looks like here in a minute. For the trend to change, the 2 makes a higher high. So the price moves the number 2 to the upside, but it's always higher than the number 1 and the number 3. Each number 2 is higher than the previous number 2. Right? The number 3 makes a new higher low. In other words, if it made a new low, it would become another number 1. So it's gone back towards it's changed directions from the number 2, gone back towards the number 1, but does not exceed it. And as this uptrend begins, it will always make a higher 2 and a higher 3 than the previous one. And for this to confirm, we want to talk about 10 to 14 day confirmation is recommending before entering the trade.
Let me speak on that, Johnny. So to make sure you understand the 10 to 14 day recommendation, I want you to make sure you know that that's referring to seeing a formation form on the chart and then confirm on the chart. When we see a 1 2, 3 bottom formation form on the chart. The ideal, I wouldn't say perfect, but the ideal looking chart structure would be if it formed within a 10 to 14 day time frame. It would not be a 1, 2, 3 bottom that wouldn't look like a trade you want to get in if it was less than that time frame. Meaning that if our 1, 2, 3 formed in, let's say, 3 or 4 days, it would look totally different on the chart, which means that it would be difficult to trade. And then let's say if vice versa on the other side, we had a 1, 2, 3 bottom form, and it took 3 or 4 weeks to finally complete and then confirm on the chart. It would look completely different for us, because what would happen is it would be a long distance, if you will, between the number 2 and the number 3, because of how long it took to form the 1, 2, 3, which means that if you understand, the 2 is our entry and the 3 is our exit, where we use our stop loss. That means that the 2 and 3 will be too far away from each other, meaning that we will have to risk way more than we probably would want to on the trade. And that's why the time frame is important. The longer it takes to form the bottom 1, 2, 3, the further away the 2 and the 3 are going to be from each other. And then now we're talking about a trade that will probably have a huge risk to get involved in the trade. So that's the reason why there's a time frame we like to see. So I want to make sure we understood that. John, do we have any charts on the slides, or do we need to go to bar chart in order to see some examples?
I think we're gonna have to go to bar charts.
Okay. So basically understand that the time frame is very important when we're looking at these formations forming on the chart. And then remember, the 1, 2, 3 bottom formation meant that we had a downtrend that now has switched and could be changing directions to go into an uptrend. That's the main thing you want to remember. So, Johnny, are you able to go to bar chart?
Sir, I'm working on it right now. Can you see my chart?
Yes.
All right, what you got, John?
Well, I'm gonna call this a 1, 2, 3 for right now to try to
Okay.
give an example. So the lowest place on the chart is the number 1. And if you notice, it changed directions and went, oops. Try that. Try that again. Oh. All right. It went up to the number 2 changed directions and came back towards the number 1, but it did not make a new number 1. Then it changed directions again and it's heading up. No, that's yellow. I need to change that color, but can y'all see what we're talking about here?
Yes.
Yes, Johnny, we can see it. Now, in this example, Johnny, I want to make sure people understand that we have a downtrend. The first slide that you covered, the market was in a downtrend. And then, remember in that first slide, Johnny talked about the market going into downtrend, and then we will see that it starts to bottom out, meaning that it's traded to a point where it doesn't want to trade any lower, and that's what is referred to as the market is starting to make a bottom. And then in that particular time, you will see that the market starts to trade and change the direction that it's trading in. So we went from trading down to now the market's starting to change direction. And when it starts to trade direction, that leaves that lowest price on the chart behind, which is our support, our floor, our number 1. Now that we have our number 1, meaning the lowest price on the chart, market, like Johnny mentioned, is trading away from the number 1. As it's trading away from the number 1, at some point, it's going to change directions again and start coming back down. So, and when it does that, it means that it hit resistance. And when it hit the resistance, start trading back down, that leaves the number 2 on the chart. So we have our number 1 support and our number 2 resistance. And like Johnny mentioned, as it started trading back down in the direction of the number 1, but it didn't go all the way down to the number 1 and trade lower than the number 1. It changed direction yet again and started going back up. And that left our second level of support, which is our number 3. And this is how we have a 1, 2, 3 bottom on the chart. Now you heard us mention something about the market confirming. When we have a 1, 2, 3 bottom, how do we know it's confirmed that it's a 1, 2, 3 bottom? The market will start to trade back toward the number 2, to test the number 2, and then trade through the number 2. And that lets us know we have a confirmed 1, 2, 3 bottom. And that's how our formations form. That's how we watch the formation so we can look at a trade opportunity. We have a 1, 2, 3 bottom that's been confirmed on the chart. And we're gonna go ahead and open it up. So as we look at this trade example, we can also start our Q&A section. So if anybody has any questions or comments, feel free to ask any questions or any comment while we're looking at this example on the chart. Are there any questions about what we talked about?
Yeah, I have a question.
Okay.
So at what point do you see when you were talking about the 10 to 14 day window? Where would you look and find that at? Is that the bottom of the chart down
You
there?
can
When
use
got
the
the
bottom.
G chart?
You can use the bottom of the chart, or you can use the bars that's on the chart, Rashid. So are you clear about the fact that each one of these bars represents a day of trading in the market, right?
Yes, I am.
So every one of those bars means that was a different day that the market was trading. Okay. And in this particular case, Johnny found a chart that he wanted to show you an example of what a 1, 2, 3 looks like. And sometimes it's not gonna be a 10 to 14 days, but as we said on that slide, it's recommended. But most important thing I always tell people is I want to see the right structure on the chart. The 1, 2, 3 has to have the right structure, meaning it forms within a certain time frame, and the number 3 and number 2 are not too far away from each other. Does that make sense to you, Sheik?
Yeah, it does. It does. Yeah, definitely.
If that number 3 is too far away from the number 2, like meaning if it took 3 or 4 weeks to form, that 2 and 3 would be so far away from each other that, and you would have to have a huge stop loss to make that trade. And that's why the time frame kind of comes into play. Are you following me?
Yeah, I get it now. I do.
Yeah.
Because you know what the I think for me the fear of it be is that remembering that each bar represents a day in the market, not necessarily just everything that happened throughout the whole day. It's one day. So that makes sense.
Yeah, and it's important to make sure you to know that when because that's not going to be the case on different charts. You know, that's on this particular time frame, the 6-month chart that we're looking at. But if you were looking at an intraday chart, you know, like a 1 hour chart or something like that, it would be that wouldn't be the same scenario. Does that make sense?
Yeah, it makes sense. Yep,
Yeah.
definitely.
But because of this time frame, each one of those bars represents one day. Every day is a different day. So I hope everybody's clear about that.
Can I, let me echo what his statement was earlier.
Okay.
But this is on a 1, 2, 3 top. Do you see how the 1 and the 2 are so far away from each other, and the number 3 is here? It's hard to trade because, you know, this 2, the entry point on the 2 would have been here.
Yeah.
If you want to enter it, you know, just below the 2, right? So if your entry point was here, you would have got stopped out if you were going on a down, if you were selling a contract.
Mm-hmm.
So if you can invert this chart, you know, then it would have been the same if it was a 1, 2, 3 bottom.
Yeah.
Okay. But now I'm not going to recommend that you go out and trade this, say, look, you just showed me a 1, 2, 3 bottom, because here's the deal. I showed you this because it's the first one I came to. But the reality is it's sitting right here on the resistance side. So it'll be curious to find out if it goes up tonight or starts going back down towards the 3.
Mm-hmm.
That's why your stop loss would be imperative that you put it down here by the 3. So if it did go back the wrong way, you'd get stopped out and it would limit your loss.
What you think, Rashid? You understanding this?
Yeah, I'm understanding it. I'm still going to need a few, more examples as we go, but for the most part,
Yeah.
I'm getting it.
Okay, we covered the 1, 2, 3 top, correct?
Mm-hmm.
So this is
Right.
the other side of it, the 1, 2, 3 bottom. This is the one that most people, it's easy for them to understand, because if you decided to trade this and you placed your order right here above the 2 or about where it's sitting right now, what kind of order would you place? Come on, somebody. Would you sell or would you buy?
Bye.
Absolutely, because we're looking for the trend to change towards the upside.
Who was that said by?
Tanya.
Tanya. Tanya, can I ask you another question, Tanya? So
Mm.
you would buy because you're looking to go long or short.
Long.
Very good. Very good. Meaning that we want to trade this market up because it just changed direction from the downtrend and made a bottom. So we're looking to get in and trade it up. And this is, like Johnny said, this is a scenario that most people understand. We want to buy it low and trade it up and sell it when it goes high. And in this particular case, once your order is filled, you will be long the market. I mean, you'll be trading the market to the upside. Very good, Tanya. Is everybody clear about this? Does this make sense to everyone? I want you guys to let us know if you're not clear on this.
I have a question
Okay.
that I'm not clear on.
Okay.
You said you don't want to go in the market, go into a trade when the 1, 2, 3 is too far apart. Can you explain again? Because I'm not sure I got it correctly. Why is it because of the number of days? If you try to get into the trade, you could lose. You would have to put out a lot more money based on the length of time the trade is taken. I'm not too clear on it.
Okay, so when we make a trade, it's important for us to make sure we go over and understand our risk to reward ratio. We want to make sure it's not going to be risking more than we can make on the trade. It has to make sense for us to take the trade. And if we have a time frame where a 1, 2, 3 has formed and it's taken 3, 4 weeks to form, it's not going to look like the 1, 2, 3 that Johnny is showing you right here. There's going to be a lot of time between the 1, 2, and the 3, which means that if you were to get in at the proper area above the 2, the number 3 is probably going to be quite a bit away from the number 2. And you understand what we use the number 3 for, right? Our exit, our stop loss.
Mm-hmm.
So
Yeah.
if the 2 and 3 are too far away from each other, you're going to have to risk a lot of money on this trade. And if you understand, making sure your risk to reward ratio makes sense, once you do the calculations, you're going to find out that you may be risking way more than you have a possibility to make. And can your account absorb you risking putting your stop loss below the number 3, maybe have you risking a whole lot of money on the trade. Do you understand what I'm saying?
Yeah. Yeah. Yeah.
Now, for another thing I want to make sure we point out. I think I did, but I want to make sure in case I didn't. Sometimes that time frame may be a little less than the 10-day recommendation. And sometimes maybe just a little bit longer, but it's all about the structure of the chart, how it looks. If the number 2 and the number 3 are too far away from each other, I'm not touching the trade because I don't want to risk way more on a trade that I can't make a whole lot on. And this is one of the reasons that I had to kind of customize trading to my liking. Nothing against my mentor, great trader, legendary trader, but his way of trading, when I talk about him, his way of trading, he used the number 1 as his exit, as his stop loss. Now go back to the example Johnny showed us with the 1, 2, 3 top. Okay. I want you to pay attention to that. And look at the number 1, the number 2, and the number 3. All right. So in this particular case, that you have a top formation, you're looking to trade the market to the downside. You're looking at, okay, this market is made a 1, 2, 3 top. I want to get in. And in this case, you're going to do what? What kind of order are you going to place to get in? What kind of order are we placing to get into a trade?
A buy order.
You said a buy order?
No,
Yeah,
on a 1, 2, 3 top.
You're gonna sell.
Say it again, Tanya.
You're gonna sell.
Gonna sell first. Remember you said we buy first on that 1, 2, 3 bottom over at the right corner. Remember y'all said we're gonna buy first, remember? So when we trade it up, we place an order to buy. That's how we get into the trade. When we want to go short and trade it down, we need to sell first. So we're gonna sell a contract below the number 2. You see Johnny line that's right below the number 2? Over to the right, you will see where our order would have got filled. If you look over to the right where Johnny's cursor is, that's where we would have been filled on this trade. Do you see that, Inga?
Yeah.
Okay. Remember I said my mentor used the number 1 instead of the number 3? Imagine if your stop loss was above the number 1 and you just got filled where Johnny cursor is. You see how far away your stop loss is from where you got in the market?
Yeah. Mm-hmm.
Okay, you got to have a huge account to trade in this. I couldn't trade like this. So that's why I made the adjustment and I started using the number 3 because they're both resistance. You remember, Barbara, I always talk about there's 2 resistance and 1 support when there's a top formation. Remember? So there's a number 1 resistance, then that number 3 is also resistance. So I would use the number 3 as my exit, but it still needs to make sense from a risk to reward ratio. Barbara, are you able to unmute?
Yes.
Hey, you want anything you want to say on this, or am I doing okay?
No, you have it, sir. You explaining it well.
Yeah, our risk to reward ratio is very important, right? Make sure we don't take a trade on that just don't make sense. And it's also important to know the time frame in which our bottom formation or our top formation, it took to form on the chart. And that's why we don't want one that's going to be 3-4 months trying to make a 1, 2, 3, because you're going to see where your 2 and 3 going to be a long way from each other. And depending on your count or your stomach, your risk appetite, how much you want to risk on the trade, your 2 being quite a ways away from the 3 means you're going to risk a lot of money to get into that trade. That's why the time frame comes into play. And we like to see it within that 10 to 14 days. Is this helping, Inga?
Yes, I'm understanding what you're saying. Yeah.
Okay. Good. Great questions, though. Anybody else got any more questions or comments? Look, guys, we want you to understand this. That's the point of going over the training. I understand that it takes a minute to get it. And that's why I'm always trying to get you to ask your questions, because it takes a minute for it to click. That's why we always say you gotta look at charts, The more you do, the more you start to understand this. Any more questions or comments?
I just want to get it clear again. Let's look at the top part of the chart from on the left side where the trend is downward, right? So the market is trading downward. If I wanted to get into the trade there and the market is going, you all changed it there for me a bit. I was watching the left side. Yeah, the one that coming down, so when the market is trading down and I want to get into the trade, you're saying that I am supposed to come in with a buy contract, not a selling contract.
Okay, so let's go back to what you were looking at. So Johnny didn't change anything. He just moved the chart over so you can see a lot of what
Right.
happened before that. Okay. So
Okay.
so you see the 1, 2, 3 top that you were just talking about. You had a question
Right.
about this, about how to enter that trade. Is that what you're asking?
Yes, yeah.
Okay, you remember I asked what order would we place, and Tanya said we would sell a contract. You remember that?
Yeah.
Are you clear about that first?
Just so you're talking when the market is trending upward.
Okay, so you said you want to look at getting in the market when it's trading down. Is that what you
Right.
is that what you said or no?
Yeah, so yeah, like this one, yeah, it's traded downward, right? So
Uh-huh.
it means the market is in on a selling. It's for sellers coming down, right?
Right. So that means if you sell a contract, you're gonna be trading the market down. That means you're making money as prices are going down. You with me?
Yes.
So when we get into a top formation, that's the same thing we just looked over at that bottom formation. The market previously, you see how Johnny moved the chart over so we can see what happened before that top formation?
Right.
You see how the market was in a uptrend before that, right?
Right.
You see Johnny
Yes.
arrow, you see his arrow pointing up to the number 1? The market was in a uptrend, traded up to the number 1. It then hit
Right.
what's called resistance, our number 1.
Right. Yes.
So we see the market starting to make a reversal, meaning that it's starting to make a top and change direction. Now that we see that, that leaves our resistance, our number 1 on the chart, okay? The
Yes.
market trades down from that number 1, and at some point it hits support and decide it doesn't want to trade any lower and starts coming back up toward the number 1. That leaves our number 2. That's where our support number 2 came in. You with me?
Yes. Yeah.
Okay, then as it's going toward the number 1, it decides it doesn't want to go any higher. It hits resistance and starts to trade back down,
You're right.
leaving our second level of resistance. So now we have our 1 and the 3 as our 2 resistance levels on the chart. Now, how do we know it's a confirmed 1, 2, 3 top? The market trades down to the number 2 to test that number 2 and trade through it. Do you see where the market traded and went below the number 2 over to the right of the number 2?
Yeah. Yes.
You see it? Okay.
Yes.
That's where your sell order would have got filled when the market traded below the number 2. You would have had your limit order that you told me we like to use already in place, and your order would have been filled, and you would have been short trading the market down just below the number 2. Are you with me right now?
Yeah.
Okay. In order to get in there, that limit order would have been a sell order to sell 1 contract below that number 2 at whatever price you would have had the order set at. And your order would have been filled. And where would your stop loss be? Your stop loss would be just above the number 3. You with me?
Yeah. Okay. Yeah.
We use the number 3 as our exit. That's where our stop loss would be. So we got filled just below the number 2. Our stop loss would be just above the number 3. And you follow me now?
Yeah.
Okay. So what questions you got about what I just said? Did I lose you at any point, or are you with me the whole way?
Well, from what you were saying to me, when the market reached the resistance level at number 1, and it came and started to come down at the point of number 2. That's where I'm going to put in my sell order, just under the number 2.
Yeah.
Right, and then the market starts to trade up again. So what I have to do now is try to, I'm going to put in terms of my stop loss. It should be anywhere around the number 3, so I do not lose beyond a certain amount if it goes up, depending on how far up it goes.
That's
Not
right.
so?
That's right.
Yeah.
Yeah, and that's why we like a certain time frame, so the stop loss, the number 3 won't be too far away from the number 2. Does that make sense?
Yeah.
The longer it takes to form the number 3, the bottom or the top formation, the further away these numbers are going to be from each other.
Right. And so that is why if I'm trading now, these things matters. But watching, not just watching the 1, 2, 3, but you have to be very what's the word? You want to be very, I don't want to use the word careful, but you want to watch the charts. What's the word? You have to study the charts very well so that you want to when you're going to trade, that you're seeing the 1, 2, 3 formations are not too far apart where you're going to be risking too much of your money going into the trade, right? Unless you have a really large account. So it's not just the 1, 2, 3 formations, but you want to see how far apart they are so that you will know when to go in and when to get out.
Yeah.
At least when to get in.
Yeah, the time that it took to form the formation is going to play a major role in how much you're going to risk when you put your stop loss above or below that number 3.
Yeah.
Yeah. So that's why we don't want to see a 1, 2, 3 take a whole month to complete a 1, 2, 3 top or bottom, because trust me, that distance between the 1, the 2, and the 3 is going to be totally different from what you're seeing on this chart.